Hey everybody, welcome to Trading Capital Alert. It is Monday, May 9th. There was plenty of action today that we need to go over. Tons of trade alerts. For those of you who were ready for Monday, it's certainly been an action-packed day. We're accumulating. That's the name of the game. These beaten down names are getting so attractive. Simply starting with Spotify, we are now holding Spotify at roughly 2% of our total portfolio. My average is roughly 95.05. You can see by this dotted green line here. I do have a couple key more add levels which I will consider adding at. One of the reasons why I added today, if you look at this yellow trend line connecting your high in 2018 to this major consolidation period, your original breakout zone, and look at these two pivots that you've hit so clean on the money. And we actually just played Spotify a couple days ago, and now look, we're getting it cheaper. I think we netted over 10% on our Spotify swing trade in a 3-day window, and yet from basically 2 days ago when we sold or I think it was either Wednesday or Thursday last week, we sold Spotify for over 10% gain. We're actually buying it even cheaper now. I love those rinse and repeat scenarios where you get an opportunity to again acquire the same stock that you just sold for a profit but at a lower price. And that's the beautiful thing about these bear markets, is that often stocks will trend lower, but when they bounce, they're very, very profitable. And then when they start falling, you can start accumulating at even a better price. So major trend line of support. If we flip to, I just want to show you the RSI on Spotify. Basically, Spotify over here, since the start of January, mid-January, Spotify entered that oversold condition, and it really stayed oversold until mid-March. So for 2 months, Spotify was oversold, and then it had basically a 2-week pop, and now you're back into that oversold category again since the start of, or since mid-April. So you're approaching that whole month of almost being oversold again. And the beautiful thing about acquiring Spotify at these levels is basically February of last year, you were at the high here of $390 stock, and now you're trading sub 100. It's pretty much, well, it's not pretty much, it's 100% cheaper than the original IPO price, which IPO'd here. Just to think that this stock IPO'd at 136 in 2018, and now it's trading at 94-ish and change. But yet, in 3 years, if you look at the growth from Spotify in the sense of how many more subscribers they have, it is night and day in comparison. They have millions and millions and millions of more subscribers using their platform now at these $94 share level than they did at the IPO price, or even when they did at this 386 price. So I love acquiring these beaten down names. If we flip to the daily chart, you can see we did make a new low, and even though they had strong earnings, I think Spotify is one of those brands that, it's those micro subscriptions that people don't even think about, and that's why I love their business model, because it's very little overhead that they have, and it's all tech-based, subscription-based, micro purchases that people often forget about and never cancel, even if they don't use the service. So ultimately, I'm personally looking for a big bounce once the markets catch a bid, probably to this, at least this 118 level, which would be roughly from our current level, a nice 23% win on the trade. Can Spotify go higher than that? It absolutely could, but that would be the first major resistance level that we will keep in mind. I will probably exit my Spotify trade at that point. There is a potential that Spotify could probably come up to test these highs at 159. It would have to correlate with a massive bounce in the spiders and the NASDAQ. Let's jump to TDOC. Again, TELADOC, we closed for a win a few days ago. I believe at the end of April, start of May, we traded TELADOC for a nice profit. Just under 10% profit, I think we made. It was like 6 or 8%. And now look, we're basically buying it cheaper than when we actually got into it, and we just have a starter position. In the event that this goes to double bottom, I'll likely add to it. If it goes lower, I will most likely add to it again. But the fact that these stocks have now made these wonderful round trips trading at these levels. Only a few months ago, people were still buying TELADOC up here. I was laughing and thinking that people were crazy to be chasing these stocks up at these highs, even in this chop here. But now that TELADOC was at over $300 and is trading at a $30 stock, that is an incredible opportunity to buy. When you think about TELADOC's business model, it revolves all around medicine, around dealing with or virtual medicine. So virtual medicine obviously spiked during COVID, and I think virtual medicine has gotten way more users and subscribers, depending on their business model, since COVID has been around. And the fact that these stocks are trading cheaper than the pre-COVID levels, but yet they have more people using their businesses and services, it's just mind-blowing to show you that these stocks were so overvalued before, and now they're getting to levels that they're so oversold. So taking a small starter position in TELADOC is certainly fine by me. I know Kathy Wood is a huge buyer of TELADOC, so she will ultimately keep selling down her Tesla position and keep selling other stocks to try to help her TELADOC average, since she did take that massive, $400 million hit in basically one day, and she wants to average down and recuperate from that major loss. So starter position on TELADOC. I easily expect TELADOC to eventually go back to the gap window. I would like to potentially it to go a little bit lower to fill this double bottom zone. If we can accumulate more and this has a massive bounce, we could potentially look at a 55% trade winner on that trade. Jumping into NET is very similar to the Bitcoin chart. We've been monitoring this bear flag pattern, which you broke on earnings. You had this massive gap down and dump, and the markets have been very, very weak. We just started accumulating net here on this green line. We're slightly out of the money, but the fact that, again, we're buying below the pre-COVID levels, it just makes my mouth water for these stocks. We also bought at a minor key gap fill area here. There is a gap fill approaching at this around this 53 level. I think that'll be a big level where we will continue to add again to our position if we don't catch the bounce again. And then you will have a massive support zone here at 45 on net. Net is one of those companies that it's very volatile. I think in weak markets it sees big sell-offs, but in strong market it sees massive rips. When we do get this technical bounce in the markets, net is going to be one of those stocks that fly very, very quickly. And one of the upside targets that I have for net just so happens to coincide with this pivot low and this gap down area. I think that is well within the possibilities once the Nasdaq catches a bid for net to have a massive move up, potentially netting us 37%, maybe over a couple week period. Let's jump into Carvana. Carvana, look at the weekly chart. One of the first things I want you to notice is if we look at the all-time price action of the stock going all the way back to April 2017, and look at the volume, and look at this. Look at this type of volume. If you don't understand volume and you don't understand how detrimental it can and can't be towards your analysis, when you see this type of volume, it means most of the capitulation has occurred. This volume is pretty much double, nearly triple the amount of the second largest amount of volume ever traded, which was the COVID dip. So when you have on a weekly basis this mass capitulation, 74 million shares changed hands versus the previous time at 32 million, you've more than doubled. That shows you that the bottom is near, the major capitulation has occurred, and when this stock does catch a big bounce, it's going to be a ferocious move to the upside. Carvana clearly got demolished today, down 16.5%. We have a pretty big position at the moment in Carvana, roughly sitting at 6% of our portfolio with the multiple ad levels that we did today. Our average is sitting at roughly 43.92, which is not far out of the money. I've seen Carvana have these 10, 20, 30% moves in one day. You're now down 90% from the highs, so the odds of a bounce are very favorable. There is a key technical gap coming up here, which was your COVID gap up. You're now coming to fill that. It looks very likely that you do come down and test that gap, which is roughly at the 35.89 level. We will add to the position 1% more down here if it does test this area before we catch a bounce in the markets. But in terms of upside for Carvana, we are trading at the low range of this parallel channel that you can see we've been trading in since we made a high. I certainly think you can get a conservative bounce to the center point of this channel. And let's just say we get that bounce to the center point of this channel from our level. That would roughly mean we make, anywhere between 60 or like 40 to 60%, depending on when and where that bounce occurs. Okay. PayPal, again, I think PayPal was actually showing good relative strength today out of all of the stocks, considering it was getting beaten down and beaten down and beaten down. PayPal, we added at 79.02, nearly the lows of the day. We were very, very patient with PayPal. One of the reasons we added at the lows is you had all of this major chop here, as well as you had this longer term trend line that we've been watching for a while, which connects pivot lows all the way in 2016, 2017, and then look what you hit today. You pretty much nailed it to a T, and you had a small bounce off of it, and you looked like you were ripping up, but the markets were just so fragile and weak that you sold off. But nonetheless, our PayPal average, we're sitting very, very pretty at around 82 and change, just sub $83. I do think PayPal could have a bounce all the way up to this 108 level. That's certainly within the cards. I do think that's very, very possible. Again, you'll notice that PayPal is trading in this downsloping channel. The thing about downsloping parallel channels is they tend to break upwards. Despite it looking like it's continuing downtrend and about to break lower, they do tend to break upwards. So I think a good level for us to take profits will be at this 108 level. Just to put it into percentage perspective, if it bounces to that 108 level, we're looking at a 30% gain on PayPal. So I think we're well positioned. Our averages in these beaten down names are extraordinary compared to where they were trading 1 month, 2 months, 3 months, 4 months, 6 months, 8 months, or even a year ago. So I'm very, very happy with where our averages are. We still have tons of cash on the sidelines to continue to dollar cost average into these beaten down names. But I do think with spiders approaching support, we tagged the low end of this channel today, and we're having a small bounce off of it. You're looking like to fill this key gap, which is very close. So you could see somewhat of a final flush down tomorrow to fill this gap before we bounce. But I do think we are very, very close to that bounce occurring in the markets. And you watch our positions that are beaten down. We are in names that are down. I think Netflix is our highest, or I think Netflix is the position that's closest to the highs, and that's down 75% from the highs. One other stock that I want to take a look at is STNE. We did add to that today as well. So StoneCo, again, another beaten down name. And the interesting thing about STNE is that you're trading in this descending wedge pattern. And yes, descending wedge patterns again tend to favor a breakout to the upside. One of the beautiful things about STNE and why I love this stock so much is here you had this massive, I think it was a 20 to 30% gap up on earnings, and now look, you're trading basically 2 to 3 weeks later, and we're getting it at a lower price than all of those people that rushed into the hype. And when you have this standout volume bar in a chart, it's often again considers that there's very close to a near-term bottom in this stock when you have this massive amount of volume, the largest amount of volume ever traded on the daily basis in the stock. It stands to suggest that the bottom for the stock is very close. We are approaching again the bottom of the wedge pattern, which can act as support. If we get down to this 770 or 759 level, I will look to add a little bit more to the position. But again, STNE is one of those ones down now. If we pull this down, almost 92% from the highs. It does not have to take much of a bid from the markets for this thing to pop, and pop very, very quickly. I mean, the fact that you get this type of move in one day, we could easily see that happen again for STNE. That's it for all the trade alerts. I think there's going to be continued volatility, but I think the volatility is now going to be to the upside. It is favorable that we've hit near-term support in many, many different sectors, in many, many different names. If we simply look at all of the sectors today, there was not one green sector. That just shows you what type of market we're entering in. And if you've noticed the trend all throughout the year, we've seen more and more and more of these red days occur. Basically, the US dollar and some government treasury bonds were the only things green on the day. That is scary, scary, scary. Very, very scary. I want to bring your attention to our bond play, IEF. I do think that this is going to put us in the money very soon. Bonds, you can see there's tons of support. If we flip to, let's just go to the weekly basis. Weekly basis, let me move this retracement zone. Weekly basis, you've hit this trend line, you've hit this gap fill, you've hit this pivot high, you've hit this upsloping trend line. So there's about 4 or 5 different technical signals there that are all converging in relatively the same spot that are providing massive, massive support for the bonds. Where do I think bonds go to in the short term as yields pull back? I think this 105, 106 area is going to be a likely scenario. There is a chance that we can float all the way up to these highs here. That's the 107.34 mark, but I'm pretty sure that will be the line in the sand for bonds, and they will ultimately start their next down leg as interest rates continue to rise. But in the short term, I think bonds have found a bottom. They get that short-term bounce, and as yields consolidate. And that's the thing, is that as bonds rise, they are moving inversely of interest rates. So when interest rates rise, they put pressure on the bond market. And that's something that you have to keep aware in the back of your mind as an investor and trader. If you don't know how the bond market plays into the grand scheme of how all assets move, then you're certainly at a disadvantage. The bond market is the biggest asset market in the world, holds the most long-term wealth and sovereign pension funds and fixed income market. It's certainly a powerful market that you need to be aware of where the trend is likely to head. That's it for today. Hope everybody has an amazing, amazing evening. Thank you for all